Welcome to the deep dive. You know, just in the last couple of weeks, if you blinked, you might have missed the wild ride the NASDAQ Q100 took.
Oh, absolutely.
We're talking about a really sharp plunge starting around April 3rd, bottoming out near the 9th, and then almost immediately a powerful surge right back up.
Yeah.
Makes you wonder what forces are really at play here.
It really does, and it highlights the kind of market environment we're navigating right now. You shared an intraday analysis of the NASDAQ Q100 focusing on roughly the first half of April 2025, right?
That's the one.
And that's our focus today. We're going to dig into the key observations in this analysis, try to understand what they might tell us about making sense of this kind of volatility.
Exactly, and this isn't just like a data dump. It's a look through the eyes of someone actively watching the market intraday. We've got details on the price movements, candlestick charts, Bollinger Bands, the usual tools, but on that short time frame. The analysis points out these crucial levels where the price might find support like a floor or hit resistance, like a ceiling.
Key levels.
Plus, it breaks down what the technical indicators are signaling and even floats some very short-term trading ideas. So let's try to cut through the noise and really understand the core insights here.
Okay.
Let's start with the big picture. What kind of price action did this analysis really zero in on?
Well, what immediately jumps out is that dramatic swing you mentioned. The analysis clearly charts that initial fall from approximately 19,900 down to 16,200. That was between April 3rd and 9th.
Wow, that's a big move, Fat.
A very significant and rapid move, yeah. And what followed was an equally swift recovery, peaking around 20,300 on April 9th and 10th.
Right.
But perhaps even more telling is what's been happening in the sessions since then, according to this analysis.
Okay, because after all that back and forth, it sounds like the market hasn't really picked a direction since, has it?
Precisely. The analysis identifies a period of consolidation. That means the price movement has become more contained. It's generally fluctuating between, say, 18,500 and 19,000 in the more recent data it covers. And the current price at the time of this analysis, it was around 18,550, which is trading within the range defined by the Bollinger Bands.
Okay, so the price being inside these Bollinger Bands, what's the significance of that, especially after those really sharp moves we just talked about?
Well, you can think of Bollinger Bands as a way to measure the typical range where a price usually trades. So when the price is back inside the bands, particularly after high volatility, it often suggests that the extreme price swings are subsiding, at least for now.
Like the market's catching its breath.
That's a good way to put it, yeah. The analysis even notes a slight upward bias recently, with some green candles appearing near the middle Bollinger Band.
Interesting. So the wild action seems to have paused a bit. Now, the analysis also outlines a number of these key support and resistance levels. Why should someone, maybe not trading minute to minute, but tracking this, why should these levels be on our radar?
That's a crucial question. Support and resistance levels are essentially price zones where the buying or selling pressure tends to be strong enough to either, halt or even reverse the current price trend.
Okay.
Resistance levels are like overhead barriers. Sellers might step in, stop the price going higher. Support levels are like floors where buyers might get more active, stopping a decline.
Got it, like battlegrounds between buyers and sellers.
Kind of, yeah. Areas where the balance of power is likely to shift.
Okay, so what are the key resistance levels this analysis is pointing out? Where's the potential ceiling?
The analysis highlights several. First, there's 19,000. That's often seen as a psychological level, right?
Right, the round number effect.
Exactly. People place orders there. Plus, 19,000 was support before the recent drop, so now it might act as resistance, what we call polarity.
Okay, makes sense. What else?
Above that, 19,909, that was a significant high point just before the sharp decline, so that's major resistance. Then 20,300, that recent peak after the recovery. Also strong resistance.
Okay.
And finally, the highest one they specifically marked on their chart is around 20,746.
That's quite a few potential hurdles for any rally. What about the support levels? Where might the price find a footing if it starts to slide again?
So on the downside, we have a series of potential support zones. The most immediate one is around 18,272. That's the bottom of that recent consolidation range we talked about.
Okay, the current floor.
Then below that, 17,866 is highlighted as key support, probably based on, previous important price action there. Then 17,548, another level where price found support in the past. Further down, 16,874. That actually held up pretty strongly during the recent sharp decline.
Right, that was tested.
It was. And the very bottom of that drop, around 16,199, that's marked as major support. And the deepest one they identified is way down near 15,188, labeled critical support.
Wow, okay, that really maps out the potential landscape. Now, beyond just price levels, the analysis digs into technical indicators. We mentioned Bollinger Bands.
Yeah.
What other tools are they looking at, and what are those telling us?
Right. They also focus on stochastic oscillators and trading volume. But going back to the Bollinger Bands for just a second, it's interesting. The analysis notes the bands are starting to narrow. And that narrowing effect, it just adds weight to the idea of decreasing volatility. Think of the bands expanding when the market's making big moves and contracting when things quiet down.
Less energy in the market, kind of?
Sort of, yeah. And the middle band, which is just a 20-period moving average, it's flattening out. That hints at a potential lack of strong trend, again, pointing towards maybe a sideways trading range.
Okay, so Bollinger Bands are showing lower volatility, maybe range-bound action. What about the stochastics? What are they signaling?
So stochastic oscillators, they're momentum indicators, like a speedometer for the price. They help gauge if the price has moved too far, too fast, and might be due for a pullback or bounce.
Overbought or oversold.
Exactly. The analysis says the primary stochastic is currently in neutral territory, kind of hovering around 50-60. So that suggests right now the market isn't extremely overbought or oversold.
No immediate reversal signal then.
Not a strong one, no. However, the analysis does note some recent crossovers within these oscillators. These can sometimes signal a potential short-term shift in momentum. In this case, potentially slightly bullish.
So overall neutral, but maybe a tiny hint of short-term upward pressure.
That's a fair way to summarize it, but you've got to remember these are short-term signals, need context.
Right, and volume.
Yeah.
What did the analysis say about trading activity?
Well, volume tells us about participation, right? How much conviction is behind a move. The analysis observed higher volume during those big price swings, the drop and the recovery. That's pretty typical.
Big moves attract attention.
Exactly. More recently, though, during this consolidation, volume has been moderate, which aligns with the price action kind of settling down. And significantly, there haven't been any major volume spikes in the most recent sessions covered, suggesting, maybe a lack of strong conviction from either buyers or sellers right now.
So putting it all together, lower volatility, generally neutral momentum with maybe a slight short-term bullish hint, and moderate trading volume. Given all that, what kind of short-term outlook does the analysis suggest for the next day or two? What scenarios are they thinking about?
Okay, they outline a few possibilities for the next, say, 1 to 2 sessions. On the bullish side, if the price manages to break decisively above that 19,000 resistance level.
The psychological level.
Right. Then the next target they see is around 19,272. And if that breakout happens with strong volume, that would be key. It could suggest more upside towards that major resistance at 19,909.
Okay, that's the optimistic view. What if things head south?
On the bearish side, if the price breaks below that immediate support at 18,272.
The bottom of the current range.
Yes. Then they anticipate a potential move down to test 17,866. And if that support doesn't hold, well, we might see further weakness towards 17,548. But considering everything, the consolidation, the neutral indicators, their most likely scenario, as they see it, is just continued sideways trading, staying within that 18,272 to 19,000 range while the market kind of digests things.
Makes sense. Bit of a waiting game, perhaps. Now, for folks who are actually day trading this, what specific price levels does this analysis say they should watch really closely, like key intraday points?
Yeah, they identify several. They mention a pivot point around 18,650, basically where it's been trading. Upside targets, 19,000, then 19,272, and the bigger one, 19,909.
Okay.
Downside levels to watch, 18,272, then 17,866, and 17,548. And importantly, they also give potential stop loss levels, for risk management.
Crucial. What are those?
Below 18,272 for long positions if you're betting on it going up, and above 19,272 for short positions if you're betting on it going down.
So these aren't just targets, but also places to maybe cut losses if the trade goes wrong. Very practical. And speaking of practical, the analysis actually includes trading recommendations specifically for day traders, doesn't it?
Yeah.
What kind of strategies are they suggesting?
They do. For traders looking to potentially go long, betting on upward moves, they suggest looking looking for bounces off that 18,272 support. The idea is to put a stop loss below the next level down, 17,866, and maybe take some profit around the 19,000 resistance.
Okay, a tactical long play.
Right. Conversely, for a short trade betting on a drop, they suggest considering it if the price gets rejected near that 19,272 resistance. Stop loss would go above, say, 19,500, and the initial target would be a back down at 18,272.
Makes sense. Target the other side of the range.
Precisely. And if someone just believes this consolidation will continue, well, they suggest a range-bound strategy. Basically, try to buy near the low end around 18,272 and sell near the high end around 19,000. But always with stop losses in place in case that range breaks.
It really sounds like the main theme here is caution and having clear risk controls, which, given the recent volatility, seems pretty smart. And the analysis has a specific section on risk management too, right? What are the key points there?
It does. Given those big swings we saw, the analysis strongly emphasizes using moderate position sizes. Don't bet the farm, basically.
Right. Limit potential losses.
Exactly. They also advise using wider stop losses than maybe you normally would. This is to account for those potential sudden, sharp moves that could knock you out of a trade prematurely otherwise.
Okay, give the trade a bit more room to breathe, but still have that protection.
Yes. And finally, they suggest maybe considering reducing leverage until a clearer trend emerges. Leverage magnifies gains and losses, so it's generally wise to be more conservative when the market's choppy like this.
All sounds like very sensible advice. So, to kind of wrap this up, what's the single most important takeaway from this NASDAQ Q100 intraday analysis from early April? What's the core message?
I think the central message is that the NASDAQ Q100, after that period of really significant volatility, has entered a phase of consolidation. It's taking a breather. The key price levels to watch are that 18,272 level as potential support on the downside and 19,272 as potential resistance on the upside.
The boundaries of the current range.
Exactly. And a clear, decisive break above or below those levels could signal the direction of the next significant price move.
And the indicators support this pause.
Yeah, the technical indicators discuss the narrowing Bollinger Bands, the neutral stochastics, the moderate volume. They all suggest volatility is currently lower and momentum is neutral. This could favor range trading strategies in the very short term.
So the real key might just be patience. Waiting to see if the price actually breaks out of this range before making strong bets on the next big direction.
I think that's a very good way to put it. The analysis really underscores the need for traders and anyone watching the market to stay vigilant, stay adaptable, especially given how quickly things changed recently.
Right.
And while, there might be a generally cautious optimism in the broader market context, this specific analysis suggests we need confirmation. We need to see a clear, sustained break above 19,272, ideally with strong volume, before we can feel more confident about the uptrend resuming.
So it's really a watch and wait situation at these key levels, looking for clues about what happens next. That's a really helpful breakdown. Now, thinking about all this, the recent volatility, this consolidation range, what kinds of trading strategies might you find most compelling right now? Or maybe what further analysis would you want to do?
That's an interesting question, isn't it?
Yeah, how could these support and resistance levels act as, launch pads? And how do the technical signals either back that up or contradict it? It really shows how putting all these pieces together gives you a much more informed view, even when things feel uncertain. Thanks for taking this deep dive into the NASDAQ Q100 analysis with us today. Definitely helps clarify a complex picture.